For more on the markets, I want to bring in Gabriela Santos, Chief Market Strategist for the Americas at JPMorgan Asset Management. Good morning to you.
Good morning.
And we've been on quite a ride. And so the question is, does the ride continue? Upward at a pace or not?
We have been in quite a ride for markets really over the past 2 years. Very strong performance for U.S. equities. We do still think this is a good environment for risk. That includes equities, that includes corporate credit. I just think there are two important questions for us that investors are already paying attention to. Number one is we seem to be out of the cyclical storm, all of the distortions from the pandemic. But now we're, in the short term, in a little bit of a policy fog environment. That can lead to some of a bit more choppy performance. So it's really all about the three S's. What's the scale, the scope, the sequencing of the policies of the new administration, and how do we counteract headwinds and tailwinds? The second big question, I think, is much more beneath the surface. If anything, it actually gives us more conviction that we'll continue to see some broadening out here from those early winners from the first 18 months of this rally. But I think it's less about painting things with one big brush stroke, and it's much more thinking about positives and negatives, which companies actually
The multiple has expanded, though. We're at 23 times.
Exactly.
And so the question is, what is the upper limit of that multiple in your mind?
So I think there are two interesting questions here. In terms of the multiple, it's easy to just say, well, we're at 22 times, the long run average is 16 times, and so here we have a big multiple contraction to come. The truth is the index has changed a lot over time, 37%, very growthy, high quality companies. So the equilibrium multiple is higher now. That's a good thing. Okay. It helps provide a floor. The second thing is, of course, earnings, and you can grow into a multiple. And I think recently in October, we've seen some downward revision to earnings estimates, but so far nothing abnormal. And if anything, there could be some upward revisions to next 12-month earnings based on different policies from the new administration, whether it's a little bit more consolidation in different industries, or whether it's corporate tax cuts that impact certain industries, and of course, the continuation of the soft landing that we have at the moment.
Political question. Do you have a view about what kind of Treasury Secretary the United States needs and wants, and how the market will react? And I was thinking about this earlier because in many ways, a Howard Lutnick kind of figure that like the tech world, like an Elon Musk might like, would be like an equity guy on the equity side. It could be, right? But in a way, Donald Trump ultimately is a credit guy. He's a debt guy. And you actually have to care about that piece of this in some ways, I would argue, potentially even more. And maybe that's where like a Kevin Warsh or a Mark Rowan comes in. But how does somebody who's sitting in your seat think about this?
So I think you've been seeing different reactions in different parts of the markets, all right? So far, we've been talking about U.S. equities, but we've also had a reaction to some of the fiscal and potentially tariffs and inflationary impacts on bond markets, which are up 70 basis points since we started pricing in a Republican sweep, and the dollar, which is up, depending on the currency, 5 to 9% since mid-September. So I think for equities, now is when there's a little bit of catch-up happening to the bond and the currency markets of starting to think through, all right, maybe there are some pro-real economic growth policies, but maybe there's also some uncertainty coming from other angles. All of this brings to last week when the market did start to react to a little bit of this policy fog. And here I think the markets, A, would just like an answer to start pricing in. And number two, what kind of Treasury Secretary and economic, in general, appointments, and what does that signal between the balance of the tailwinds and the headwinds? And here specifically thinking about tariffs, which is something that the equity market hasn't paid attention to. So I think equities would prefer more steady as you go, a little bit more predictability versus the tariff uncertainty.